Hey, it's Halloween 2019, and here's a headline that's meant to scare investors. It was posted yesterday, October 30th, by Investopedia. The author is Mark Kolakowski. Why stocks will plunge 18% by year-end despite Fed rate cuts. Yesterday, the Federal Reserve cut the federal funds rate by 0.25%, and the stock market took it in stride. It was totally expected, so the stock market did not go up a whole lot, just went up a little bit. Everybody was satisfied because it was fully expected, no surprises. Yet, the author of this article does not think the Fed rate cuts are going to do anything for the economy. All right, kids, I'm ready for you. I've got like $60 worth of candy here. Everybody loves Reese's, and Twix and Kit Kat are okay. The article starts off, despite the Federal Reserve's decision Wednesday to cut rates for the third time this year, several prominent market strategists see a big stock market sell-off in the near future. Peter Cecchini of Cantor Fitzgerald expects the S&P index to be at 2,500 by early 2020, a plunge of about 18% by early next year. The article goes on to suggest that there's weakness in both manufacturing and consumer data that they're analyzing. Another market strategist that they cite actually compares this market bubble to the dot-com bubble of the early 2000s, but I think that's a real stretch. I expect about 120 to 150 kids this year. That's about the average per year. Every kid gets a couple pieces each, and the neighborhood kids get 4 or 5 each, those that I know, or kids with really good costumes. I'll give them a little extra. And then like the teenagers or the high schoolers who come around without even a costume, I might give them 1 Twix if I'm feeling charitable. I will leave a link to this article down below so you can click on it and read it if you like, but the key takeaways are these. According to the article, a recession in 2020 is increasingly likely, as is a sell-off in stocks. Stock prices have been climbing despite weak earnings, and the impact of rate cuts by the Fed on the economy is diminishing. Now, whether or not any of that really pans out, I guess we'll see over time, but I just wanted to point out this article today, especially on Halloween. You see them very often, and you've been seeing them all since the growth for the last 10 years of the economy. You keep seeing these week after week, these scary articles about the coming doom of the economy. It's going to fall, the stock market's going to fall. They've been telling us that for years. I just see them as kids in scary masks, just saying, ooh, trying to scare us, but no, we're not going to fall for it. We're much too smart. So the article says, okay, the S&P is going to drop 18%. Another guy in there says it's going to drop as much as 50 to 60%. I think maybe the real drop will be somewhere between there, maybe not even as bad as 18%, could be 10%. Eventually there will be a recession and the market will drop significantly. But remember, if you're a long-term investor, if your horizon is 5+ years, you don't have to worry about these short-term falls. Even if it happens in the next year, 2 or 3, you want those markets to fall while you're still putting money in, investing on a regular basis, dollar cost averaging, because then you're buying shares at a lower price, and the market will recover because it always does over time. All right, my electric pumpkin is plugged in and ready to go. I bought this at Target about 5 years ago for $5. Ever since, I haven't bought a pumpkin, so I've saved $5 or $6 a year on not buying a pumpkin and not having to carve it. People may call me lazy and cheap. I think I like to call myself efficient and frugal. How about that? Now, if you have money in the market that you need within the next year or two, that money should not even be invested in stocks. That should be in a safe investment, just in a savings account, maybe even bonds. But short-term money does not belong in the stock market, just for this very fact that there could be a correction. We don't know when it's going to be. In the short term, if you need that money, you don't want it in the stock market, obviously. And my candy's ready to go, and bring on the kids. So next time you see one of these articles online that says, oh, the stock market's going to crash despite the market hitting new highs week after week, you're going to see these articles week after week. Oh, we're on the edge of doom. We're going to fall. The market's going to fall 10, 20, 30, 40%. Every week you're going to see these. You're not going to fall for them. You know, those are just those kids in the scary masks. They're just trying to say boo and try to scare you. We're not going to fall for it. You don't fall for it. Hey, happy Halloween. Have a great day and night.